Market, stop. Market, study, market. Yeah, though. Yes, every time. This is like the most consistent. Always usually reacts off of. Then we have small low reaction and all that stuff. Sweeping out all this liquidity, tapping into this imbalance. Having even more of a bullish reaction. This fair value gap right here, and then we. Okay, that was weird, right? That's pretty weird, but it worked out. Pretty weird, but it worked out. The gap instantly, and then we come into this. Now it's like a. Oh, there we go. We go to the trap. Well, we still start to accelerate with a lot of speed within the area of demand, then those things become manipulation more than likely. So now I have this ultimate reason, plus also lip point as well. Fair play. That's the next point. Yeah, all depends on timing for sure. Now into it here with speed. Heading 50%. So okay, so we break past all that, and then once we have a small little bearish reaction down, but then again nothing crazy. And then I had it marked out because the low point. So this low point got smacked up. Alright. And then that's we have our dump, which is interesting. And you know I walk 1,000 miles. See you. I mean, this could be for sure. Breaker transfer. Yeah. Not 110% surprised. Order transfer for breaker. What the frick is this? Oh. I had stereo. Play my own. Alright, now we're actually having some kind of reaction on the line area, which is interesting. Yeah, I wouldn't care. I won't even care. Never mind. If we're gonna have a bullet reaction like that, I best care. I really best care if we even. That's what I'm saying. I mean, a bearish reaction like that. Shoot, bro. That mean that was meaningful. So I need to start looking into that. So the timing on that one was London, New York, and then whatever. It's pushed down. That's like, how the frick would I be even bearish biased though to continue to sweep out liquidity? But you saw that all this. You see what I mean? So how can I be bearish biased if there's nothing to you get me, man. You get me, famo. It's the 28th. Well, there's 2 days until monthly open, so a little bearish for the past days as we sweeping that high. Okay. For the past week, we were bearish. just off a sweeping high. Then we come down a little bit. It's interesting gameplay. This was interesting. I'm really just in there watching this stuff. Oh yeah. Oh yeah, a lot of stuff play. Like, I'm not even right now. Yeah, we reacted off of. So we reacted off 80%. 80% seems like a nice valid reaction. Almost every freaking time. And we got some various days on that one. Now we have this. Then we also have this wick. Then we have a sweep. Obvious bears reactions on the day of 13th. Bears reactions and stuff like that. I've made that out 1,000 times. About these highs, and then we have this buy to sell. See what we do. Start to go down a little bit. Then we have that wick. Now we sweep out these highs and then manage to sweep out whatever. I have an obvious reaction off of here. And yeah, so now I'll record that because I'll make a little video of that. Alright, just breaking down this price action real quick and showing you how good of a reaction it's gonna be. So number one, look to the left. What do we have? Double lows. I mean, not double lows, double highs. Now that's automatically a significant liquidity point. We look to the left again. What do you have? Buy to sell. What do we have in a buy to sell? A lit point. This is the daily, by the way. So the fact that, and listen, I want you to look at how each candle expanded. what I mean by like the speed expanded with, the minimum to no pullbacks expanded with. And we're gonna go down a long time frame and show you. Look at this, hold on. Let's go back. Let me go to this game though. Fuck it. Look at this. Speed. Little to no pullbacks. And not only did we leave a gap on a low time frame, but we left also a gap on whatever. Look at this small wick. A gap. Huge inefficient gap. And that's when we kept on expanding. Look at this. We can do it like this. We kept on expanding lower. Look, low, little to no pullback. Okay, we gotta go right there. Still. And we kept on expanding lower after we spent it for 3 days straight. Spiked up. What do we hit? Almost 50%. But we hit whatever. And look at the reaction. Completely bearish reaction, filling those gaps. And after we fill in this gap, what do we have? A reaction. Coming back to this wick. Filling. Nah, we didn't fill it. Oh, wait. We almost filled it. Okay. And then, yeah. We have to dump from there. So that right there, what I say is a plus setup, because we came in with speed. And yeah. Took out both significant liquidities. So yeah. Wednesday, time of reaction 14 o'clock. 14 o'clock. It was the 17th. So 17 to 25 range. Feel confident. Oh yeah, no time frame as well. What do we have? Build-ups. It's a lot of build-ups. A lot. Not too much inefficient prices as I thought. But then again, double lows on top of build-ups. It just didn't get no better than this right here. So, then again though, you can't really see the speed on the daily. The daily moves so slow you can't see if it's having speed like this. So, what we look at there? What do we have? Lows. We have a supply area, imbalance area. Coming at imbalance, instantly smash through it. And then, no, forgot that. Watch. What's I'm gonna do? Nah, I didn't see if we had a reaction on her yet. But look at this. I know we smashed through this. But watch. Look at this. This whole wick is an imbalance. What do we do? Slight pullback, and then we just smash right through it. Now this becomes a high probability area to react from right here. This fill right here becomes high probability to react from. If not, we can drag it from the body to here of this sell to buy, which literally is almost sprung up the fair value gap. So now that we smashed through here, that's automatically a significant point of liquidity. If we smash through it with speed, meaning by cells are induced. Let me see what we do. Boom. Go past that. Look at the reaction. Look at the reactions. Look at the reaction. One bullish day for you. Cashed out. One bullish day. Whole day was just bullish. I didn't even know it was gonna have a reaction like this, but I knew it was gonna have a reaction like this. Whole day was just bullish. Just off of smashing through the supply area, with no mercy. When we smashed the supply, that means it was a stop hunt, to be real. Stop hunt, so that means that significant sell side was taken, and now we can look to take our buy side, which is looking to the left. These eyes, and feeling some of the inefficiencies up here. But yeah. I never put the video in. I'm tripping. Yeah, I didn't put the video. Time of the reaction was in like not 8:30, it was 5. Time reaction was about 3. Just being real. Just being real. Alright, now what do we have? Huge imbalance. So to consolidate a little bit. Break past the consolidation. Now that becomes a significant point as well. So number one, going hourly, you can just see how we consolidated for the last hour. Whatever. This becomes a manipulation. And manipulation into what? We're still in this whole area of sell to buy. If we even sweep that out, we're also in another sell to buy. You get me? So, yeah. We get to automatically expect the reaction from there. No, this one is let's go back to that. I need to get a feel of that one more time. Look at this candle. Not breaking past no range. We keep on consolidating. Yep, it's consolidation. And then we finally expand lower, taking it out low. Just for a trap. That was nice. So we could have just profited off of this pullback. to check out nothing but this area. Interesting. Small distribution, mate. Very small distribution. Q manip. Q manip. I want to record that. Let's go back to this candle and just watch how these candles form, and you tell me what happened. I'm just break it down. So we expand higher. First candle, cool. Reacting off of that, and this candle right here going up, down, up. Never really breaking past its ranges. All right. What do we call that? Accumulation. Just a very choppy price action within this candle, not really expanded to a high or a low. What do we call that? Accumulation. Now, in this candle, what do? Little to no wick. We start to expand down with speed. Now, this area becomes easily a significant point of liquidity. Why? Because of accumulation. And then we manipulate, not only taking out previous day high and previous day low, we take out the previous day low. And we're also in this sell to buy. So we can have a small reaction to trap out any type of people that's buying or selling on a low time frame. So these are reactions that we can profit off of. And if you drag out the whatever, see, it's perfectly hitting the 50% of that. Now we're going to 5 minute. We can see when we have these. It's trap timing. So, boom. Now, key thing right here. Alright, we tap into that fib level, whatever. But key thing, lip point, because we tapped into the range, expanded lower, double lows, middle highs. Imbalance, which makes this automatically a weak area to hold. Imbalance. Inefficient price. What do you think is gonna happen? We trap it all the way to there. Just to get our reaction down lower. It could be that simple. Okay. And we even managed to take out these highs in Asia. Perfect timing. I started to go higher. Take out Asia high to market structure shift. Manipulate the high again to expand lower for the rest of the days. Yep, and that was nice. Just wanted to give a little breakdown on that one. So it's very nice. Very, 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 very. Max and Ruby. It was A. Nah, I said more like it was B. When I win today, do I feel confident? Not confident, iffy. And this one was what? 25th? 25:30? Now it's this, but still. The time of the reaction was in New York, buddy, so New York is at 11, so I'm just gonna say like 10:50. And yeah, Wow. Just hit 30. Feel like I was streaming for an hour straight. Feel like I've been streaming for an hour straight. Alright, well, we can continue to be real. What do you have? Imbalance. Imbalance area. We tap into that. No reaction. Tap into this inefficient price. Price becomes efficient. Right? We go down. This thing's weird. You guys know for this one. Very interesting. Alright, bro. You won. Very much interesting. Price is efficient now. We didn't tap into 50, but we did tap into 50%. Oh, we did tap into 50%. Yes, we did. Okay, I'm going to valid then. This most case studies. Shoot, I can do a breakdown of this whole freaking thing, bro. I can continue to do breakdowns. For sure. Another breakdown. What do we have? Clearing this real quick. I already have it marked out so you can see it, but what do we have? Huge wick, close, bullish. This whole wick becomes area of imbalance. Looking to the left, or area imbalance. What do we have? Inefficient price. Right here. And we also have a fair value gap. Right there. Now, we can just look, right? You see, the first sweep was these lows. That was the first sweep. So number one, once we have already a sweep, these become oversold, right? Now you can expect some sort of reaction from here, but at the same time, if we don't, what does that tell us? This was a trap, quote unquote, stop on. And after that, we close. We close. So we tap into this. Now, anybody that's still trying to sell, and this, you know, and this candle, it's probably gonna get trapped. Because no, so a candle open is automatically trap time. It depends on the context. In this context, we swept to low, and then we opened up a new candle. So anybody that's still trying to sell the previous day, more likely to be trapped by this new day. After hitting inefficient price action, and also tapping this fair gap, hitting 50% right here. And yep, that's about it. So we even hit 50% of this one as well. If you really want to be, oh no, we didn't. That would have been nice though. But yeah, bullish day, just like that. Max and Ruby hit Max. I didn't put the video, did I? No, did not. Let me just do this real quick. Paste that right there. Then let me extract this video. Alright, on this one. Then we have that. That's A. Nah, this was like B, but it's reaction also, like confident, iffy. Confident, iffy. Not the craziest. The timing we had the reaction off of was in Asia. New day opened up 18. And then yeah. So we had in Asia. That's a reaction. So 20. Month range. Still in the 25th. That's tough. Day. Thursday. I don't have a Thursday. That's tough. That's definitely not Thursday. yeah. For this one, we got that. We have this, and yeah. Okay. Alright, I think we're gonna take a little blind. I can continue to do breakdowns. What is this? Imbalanced area. What do we have? Huge expansion lower. Taking out this will become significant liquidity point. If we do. What do? We tap into this with speed. So now this is no longer liquidity point. This is now a area we're gonna take. Let to take or whatever from. Reaction from. As you see, swam. Reactions, my boy. And then we expand. I did not mean to. Whatever, I can just do continuous breakdowns, bro. This comes a reaction point. As simple as that. Yeah, so I got another breakdown. Frig it. I got another breakdown. Let's get this off the screen. Let's close this. It's the bullish one. Alright, let's start recording. Alright, instantly. What do we see? We're reacting off of this, like I said previously. Now look at the speed on this candle right here. Look how big this is. That's a huge bearish candle, making this high a significant point of liquidity, and also making this wick an imbalance of demand. Now what do we have? The close of the day. What do? We don't respect this wick. We continue higher with what? Speed. Now everybody's induced in an area of premium price. Premium price means you sell. So we tap into this wick speed. Now we can instantly expect some sort of reaction. Looking at the time, what's the time on this? London. So we expand higher in London, right? Manipulating before that, down, and then we manipulate the highs. Structure shift, just to have some sort of reaction down perfectly. This wick was significant. Had a reaction from this area, and then we expand lower to fill in this, potentially take out the slip point, which in this case we do not, but still could have still profited off the reaction on the 5 minute. So yeah, smaller breakdown, but it's definitely what a New York do. Let me see. Take out the highs, inefficient, come lower, tapping into this right here, chop, small reaction down, take out the lows, and this, right, and then we expand high off of that, never closing below this area. So yeah, but on IB, yeah, just want to talk about that. I know you can, but you have my that's why. Say you wanna be my main chick. My main chick. Money Monday. It's 25 range again, right? 25. 25 out of 30. Reaction was, and reaction was about 530. 530 reaction. Feel confident. Then it was A. It really was A. I mean, being honest. And yeah.